Paul Harrell, weekdays from 4 to 6. Learn more at paulharrell.com.
Josh, welcome back, sir.
Hey, Paul, how's it going?
It's going pretty good. So, to kind of give our listeners a recap, if they missed last episode when you were on, you said that the first day of testimony was from other legislators from Indiana, North Carolina, and they were actually advocating for, less, potential less money going to the government, lowering taxes and that sort of thing. It sounded like it was really good. You seem to be pretty favorable to that. What about today when the consultant, Randy Bauer, who we've paid $300,000 or his company, and of course, he's kind of he's a liberal, lifelong Democrat. It was his turn to give his testimony. So what happened today at the task force meeting?
Yeah, like you said, yesterday was, okay, these are conservative Republicans. That was one of the legislators, how he described himself. And these are how they've cut taxes and eliminated taxes such as the inventory tax or the franchise tax. And this is what's happened. They've gone up the ranks. Their state has improved economically, and there's more economic freedom in those states. And so that's what we heard yesterday. Well, it was kind of more of what we've heard from Mr. Bauer and the consultants, just a lot of information. And to be honest, Paul, it was a lot of, of ideas I personally wouldn't want legislators to be thinking about, things like tax increment financing, eliminating exemptions, property tax for churches or charitable organizations.
Wow.
I don't want the legislator hearing ideas of ways to raise revenue. I want them to focus on ways to cut spending and then cut rates.
So let me stop you there. You're saying that the Randy Bauer was talking about eliminating the property tax exemption on churches. That's what you're saying.
That was part of the presentation.
Wow. Josh, you're breaking up a little bit, sir.
Can you hear me, Paul?
Yeah. I'm sorry. You were breaking up just a little bit, so we missed the first part of what you were trying to say. We can't hear him. Hey, Joe, will you try to get him back on the line? See if we can't get a clear connection. I don't know where he's calling from. I mean, I'm assuming he's calling from somewhere in the I-40 corridor. So that would be. Sometimes it can get bad reception that way. So it depends. Folks, the sound off on Facebook, by the way. But that right there, we'll get him back on the line. But that alone is pretty wild if you think about, like, I know they're talking about getting rid of exemptions, but you're telling me we are so desperate for revenue and more government growth, or let's say revenue neutral is what they would say, that we're going to end the deduction for churches and nonprofits. We have Josh Waters back on the line. So I can't believe that was part of the Josh, the recommendations or the testimony. Tell us a little bit more. You said that there was something else about a property tax. I didn't quite recognize that phrase that you said.
Yeah, so there was this. It was kind of brief, and most people probably wouldn't have recognized it, but it was tax increment financing, and that initially really grabbed my attention. I'm like, tax increment financing. I think I've read about this. I've maybe even written about this, and so I immediately went to conduitforcommerce.org, and if you go there under the crony capitalism tab, the introductory paragraphs talk about tax increment financing as a tool to promote crony capitalism. Essentially, it's rebates or total exemptions on property taxes, those kind of a thing, for these special districts. So you get recognized as a district, and you get these rebates or credits or however they structure it. And then a lot of times they can turn around and sell the tax credits to their other business or offset taxes they owe other places. And there's just been, a lot of examples of very egregious abuse of this, and whether or not they produce economic development is a whole other question. But that type of crony capitalism, I just hope our state doesn't look to that as a model to pursue.
Yeah, that was interesting. I also know tax increment financing, this idea concerning property taxes, it's not just opposed, by Conduit for Commerce, but also a national organization like the Cato Institute. They've got some negative stuff to say about that as well. I was able to listen into a few live streams this morning of Randy Bauer's testimony. Again, a lifelong Democrat that we've hired to come in and advise a bunch of Republicans on what tax policy is. One of the things he said when he was talking about property taxes was that bond rating agencies really like property taxes because it's a stable source of revenue in an economic downturn. Did you hear that part?
Yeah, it's, again, unfortunately, a way we can – it was basically how can we, find ways to raise revenue or other ways to make sure we can increase the revenue going forward without cutting taxes or spending elsewhere. And that's, I think, maybe plays into that. And like we talked about, you talked about last week, Paul, bonds are equals future tax increases. And, they do want to look at that. They want to know, okay, if property taxes are high or the rates are high, those are a somewhat reliable source of income to the state rather than income taxes or sales taxes that fluctuate based on the economy. But people, you owe your property tax regardless if you got the money or not. If you made money or not this year, the bill comes due. And so I think that was one focus, though, maybe a positive spin out of it was, okay, we understand that property taxes are maybe, if we raise those are the most politically toxic because, typically the people who own a lot of property, whether or not they can pay it, that's always a question. So, it's kind of an unfair type of thing. Okay, here's your tax bill you get a couple times a year, property tax or however it's sent out, and then whether or not they can pay it, they don't really care, whereas the sales tax and income tax is based on how the economy is doing, your personal consumption or your personal production.
Was there any consensus? Because, it sounds like it was a different feel. The meeting yesterday, again, was about, seemed to be actual tax cut ideas and what other states have done. The meeting today, more about revenue neutral, which is, not really about shrinking government and then giving more money back to the people. It's more about making sure that government has the exact same amount of money at least as it's getting now, and just kind of shifting everything around. The presentation as a whole, though, Randy Bauer, I've covered this. You can go see his tweets. What were the thoughts? How was the performance of the presentation?
Well, there were at least two instances that I can remember that were just pointed out. We don't know if there's more. There's two instances, Paul, today where the amount of revenue that was collected from a specific tax is the inventory tax. That was actually corrected by a presenter later on. And then a specific amendment that was referenced in one of the slides on the presentation was also corrected. I think that was kind of a basic amendment on property tax generally about the millage rate and stuff. And so that was kind of, I think a little alarming to some people. I'll just tell you this, Paul, someone who was sitting in front of me when we broke for lunch, she was frustrated, got up and said, so much misinformation,
Wow.
And that's, that's not my words. That's not, maybe they're more of an expert on the property tax issue. But that was what I overheard from the person sitting in front of me after the presentation from this morning.
So we've paid this guy $300,000, and they're presenting to the task force committee, and they're presenting numbers that are not accurate. They're being called out. These numbers are being called out as being incorrect, and people are correcting the record. And then it's obviously so obvious, I know that was redundant, that the audience is saying, wow, so much misinformation. So that was kind of the vibe that you were feeling was, hey, maybe we're not getting the whole truth here.
Yeah, it's hard to say with other specifics. I think the person sitting in front of me had a lot more expertise. And to be fair, I think Randy Bauer said, okay, there's more people with more expertise in this. But, at the end of the day, like you said, if we're paying someone $300,000, I hope they're either finding the experts to bring in as part of that contract or something. But one positive thing, Paul, I think today that maybe we can focus on was actually recommendations from Conduit for Commerce about eliminating the franchise tax and eliminating the inventory tax. There is actually discussion on that, and if we eliminated that, how much would that cost? So, I'd like to hear more of that going forward, ways we can eliminate taxes. And I think Representative Jeff Williams actually sent out a tweet or Facebook post today about, yes, we do need to eliminate these. So
wow, you mean
that was one positive thing coming.
The corporate tax, you're saying, they talked about eliminating it.
So, well, the corporate franchise tax.
Okay.
So a business in Arkansas, for the benefit of doing business in Arkansas, for LLCs, it's $150 they have to send into the state every year just for simply existing. And then the inventory tax is a property tax on the inventory of a business. So when you think of Amazon or Walmart, these large companies with these distribution centers, they're never going to, or I would doubt they would ever want to be located in a state with high inventory taxes. And it's kind of a double taxation kind of thing too as well. So those were two taxes that Conduit for Commerce has specifically said we should eliminate to be more competitive, have more job growth, economic growth. And so I hope the task force focuses on that and ways we can eliminate that going forward.
Yeah, absolutely. That's, it's good that you're there on the ground, and you can kind of see what would be a positive idea, what would be a negative idea. And so overall, you've now been to 2 days of meetings. Again, the recommendation, a preliminary recommendation, is supposed to be out by the end of this month. I know, it's only been a day or an extra meeting, but are there you have any ideas on what's going to be in those recommendations?
I don't, and I was a little confused today. I haven't reached out. I need to reach out probably, and then I was a little confused on who exactly would be writing this recommendation. Would it be the chairman? Would it be the task force collaboratively? Would it be the tax consultant? I think that was a little unclear leaving today. I don't know if that's been discussed, but hopefully we can get some clarification and get back to you on that, Paul.
I hope it's not the consultant. I mean, if it's the consultant, he's just going to write. They're going to write whatever they're told to write because they're being paid to write it. So anyway, that's fascinating.
Yeah. So we will see. They have a few more weeks.
Josh Waters from Political Strategies. We appreciate it, sir. As always, be safe on your travels, and Merry Christmas to you.
All right. Thanks, Paul. Merry Christmas.
All righty, folks.
Paul Harrell, weekdays from 4 to 6. Learn more at paulharrell.com.